All right, traders, welcome. This is Sunday, April 30th. We're going into our last few days of April, into the first week of May. So this is April 30th, Sunday, beginning of the week. Let's go. Okay, so risk disclaimer real quick, just to let you guys know that this is, Forex is really, really risky. We are here to just get more of an educational purposes. You got to be careful with your money. Always paper trade unless you've been training for quite some time. Always seek, trading, mentorship, training. Treat this like any other real business, but please understand that Forex is really, really risky. And everything that we show here and that we evaluate and review is not the institute as trading advice or financial advice, or for you to take any trades other than just analyze and take that for educational purposes with your own education, with your own trading efforts, and see if you agree or disagree, and that's perfectly fine. Again, this is just for educational purposes. I'm not a financial advisor, so do not take any of this as financial advice or any influence to take any particular trade that you may see. Okay. All right, with that being said, let's switch over to fundamentals. All right, let's take a look. All right, so this week, let me see, what do we have for this week? We have, so last week we had the Japanese, Japan, yen's bank rate decision, and that obviously weakened the currency. Let's take a look there for last week. That just horribly just made that yen just weak, and it just tanked it. So all of yen is now just weak. And it looks like they are okay with the currency being weak. And you see the day before that on Thursday, yen was weak again. Swiss franc was kind of weak, but that means that currency pair was just ranging, but everything else, I guess the yen was just booming. And then on Friday, that's when everything against yen was just shooting up. We had pairs as much as pound, New Zealand, this is pound yen. So that sort of shot over 400 pips. New Zealand shot over 200 and something pips. So we'll definitely take a look at yen. Obviously, it looked like we're at some extreme levels on yen. So I think it's very, very important that we take a look at yen to see how much more does it have to go, right? And it looked like it's probably going to keep going. But I think it's important to look at the yen pairs, not so much, where it's going and how much it's going, but also which pair is probably the best to trade, since they're all shooting up and mostly they're all going up. I think it's important to kind of understand and say, okay, which out of the yen pairs, you can't trade all of them. They all look like it's going up, but there's going to be one or two pairs that's not going to go up as much, right? And to me, when you're at extreme conditions and you're looking at all the pairs, you want to look at the one that is most likely going to give you the biggest opportunity, the biggest edge out of all the Forex pairs for Japanese yen pairs crosses. So you want to select the one that's look like it's already at extreme. It's not like it's going to go any more further, like it's just going to keep going and keep going and keep going and keep going. You want to pick a pair that's going to already struggle, whether it's already at a key supply or resistance area. And you want to pick the pair that's pretty much not going to go any further than where it's already at. And that's where you want to go, right? And you probably want to select that pair versus the other pair that look like it's already got more room to go. So I think that's very, very important. Okay, so we'll take a look at the yen pairs crosses more closely this time than we had before, besides the dollar pairs, because the yen pairs right now are definitely looking really, really good. But we also have some extreme edge positions on the NCD pairs, like the Euro NCD, Pound NCD. I think it's important to look at that. And the reason why I say that, as we look into fundamentals, it looked like we got some NCD news finally coming in this week. So that might be the catalyst for the market makers to make their move. So a lot of people's trading, when looking at NCDs, NCD CAD, NCD Chef, you're looking at NCD JPY. Of course, we're going to look at that, or your NCD and pound NCD, and you're probably asking yourself, geez, when is this thing going to turn around? Or when is this going to stop or reverse? Or where it's going to hit that pivot level to where it will pull back? Well, it always happens during the NCD news or during news catalyst. And this week, we definitely have some news. So let's take a look at the currency news, and then we'll get right into the charts and keep going. Who we have with us today? Hey, Festus, what's going on? Festus, hey, Brad. Thank you for joining. Sharif, what's going on, Sharif? So this is being recorded. So if you guys missed the first part, that we're just getting started, you can always go back and we watched the replay, but we definitely got this recorded, and this will be uploaded shortly after today's meeting. But there's a lot of trade opportunities, a lot of things going on with the market. You guys want to probably just sit back, jot down your pen and paper, jot down some notes, and let's take a look at what's going on and see if we get some good trading opportunity to get into the market. All right, awesome. Okay, guys, so starting with Sunday, nothing big. Monday, we just have a little bit of USD ISM manufacturing. And I think this week is going to be a big week, obviously, for the US dollar because of two big reasons. Number one, obviously, we got the non-farm payroll on Friday for the first week of May. But the other thing is, we got a double whammy. We got the FOMC rate decisions on Wednesday. So at 2 p.m. Eastern time, that is going to be a big mover. So this is going to be a big volatility week for USD. So anything leading up to that, I'm not even paying attention. For instance, Monday, USD ISM manufacturing, really? That's more going to be a trap day, right? So whatever's happening with USD on Monday, I wouldn't even trade it. I wouldn't even try to scalp it. I wouldn't even take that chance. You're just going to get trapped up. You're going to get either stopped out, or you're going to get frustrated, and you're going to have an extra position you're going to have to manage. So me, I'm staying out of USD. I'm not even looking at it until after Wednesday, to be honest with you, for the simple fact that I know how Monday and Tuesday is going to be leading up to Wednesday. Monday's going to be a trap day. Tuesday is going to be kind of ranging, and Wednesday to just go crazy, right? So why would I want to get all hot and bothered into wasteful, risk, getting into a trade that I may have to hold on longer than I need to, but more importantly, I may need to get into a trade that I don't want to, or an extra trade I may have to manage and eat up some of my equity. Not that I can't, not that I, wouldn't mind. Do I need to? Get what I'm saying? If I'm not in the trade, why do I? So that's Monday. Getting into Tuesday. Okay, so we're going to start off with Australia. So there's going to be some Australian news. This is going to be a major one. So we're going to look at some Australian pairs, because this is going to move the market. So Australia, right? We're already at 3.6. We can expect another 3.6, what they're expecting. And this most likely not going to do anything else for the currency other than just come in at the same expectation of no interest rate. So this might be, I can't remember what the other interest rate was for Australia before. I don't think they raised interest rate to my recollection, but this is look like they're pausing, right? So when interest rate does not increase and there's a pause, what do you think that does for for a country's currency does not raise any more interest rate? And it looked like it's pausing to get ready for a possible pivot. This is going to weaken the currency. And I can probably look at that fundamentally and say that's going to be a concern. So if we have anything like GOD or EUROD, and it looks like it's already going higher, and it's already looking at it's at a 100% retracement extreme level on the 4 hour or even the daily, which we will take a look. this right here is not going to help this currency bounce off that supply. This has looked like it may even push it even further to the next level, and we may need to take a look at that. So in other words, because of this, I don't feel there's going to be some strength coming in for your odd, pound odd. So if you're already in a buy, if you're already in a sell with these trades, I would say just hold on to them. If you're already in it and you're waiting for this to reverse, I would say just hold on to them until after Tuesday during the Asian session, because this looks like this may shoot up even further if Australia is weak. And we'll take a look at that. But that could be a little bit concerning if you're already in the sale. But if you're not, and if you're looking to get into a trade opportunity, this might be the catalyst to wait until after this news release and let euro odd and pound odd reach to the next level of supply. And we'll take a really closer look. But fundamentally, that looked like it's going to be a problem for Australia's currency. Okay, so later on to Tuesday, we got the rest of the PMI news and blah, blah, blah. It's near here or there, right? Nothing to be a showstopper. And then around 10 a.m., we got the USD news. Again, Tuesday, don't worry about it. I wouldn't even touch it. Don't even look at USD. In fact, any USD crosses, if you're not already into the trade, I wouldn't even look at it until after Wednesday, to be totally, completely honest with you. Unless you're looking to get 10, 15 pips. I mean, if you're that bored, go for it, right? Me, I'm not looking to get 10, 15 pips. I'm looking to get 50 or more, 100, 200 at best. So why am I going to waste my time trying to dabble into Monday and Tuesday when it's already at a lower level and we're not sure exactly what this thing going to do, right? So we'll take a look at it. We'll take a see, what most likely will it do. And I think Wednesday is really going to be the deciding factor. I don't think Friday non-farm payroll is even going to make a difference. So we'll take a closer look. But that's what I'm saying on Tuesday. I'm not even looking at it and doing anything. Okay. So mark your note on Tuesday, Asian session. Very, very important. If you're looking for some answers for NCD, you may find it on Tuesday at 6:45 Eastern time. Whatever local time that is for you, this is when Asian session, we should see some news regarding NCD. Bing, bing, bing. Now, this is not your bank interest rate, but this is definitely a major employment data. It's a major catalyst of currency, valuation in terms of its economic health. Okay, so if this is positive, which it doesn't look like it's going to be positive, it's negative 0.2, and it's already saying it's 0.4. Well, this is saying this is going up, but you got the unemployment rate saying that it is going up as well. So this may be a mixed news. Again, I wouldn't really worry about the data. Just know that around 6:45, you're going to see some news around NCD. Okay, so we try not to worry about in terms of what the news is going to be, but just know on NCD on Wednesday, Tuesday night, Asian session, it'd be Wednesday if you're in Australia and New Zealand, but we would expect to see some NCD news, and that's going to be the time I would want to see what's going on with those NCD crosses, and we'll take a look at that. Okay, so on Wednesday, this is what I'm talking about. So early morning, you're going to have ADP news. Don't jump. Okay, let this thing jump off. Let the thing do whatever it's going to do. And even if you're trading indices at 9:30 a.m., don't touch. Don't worry about it. Don't jump. Let it go. Okay, and that's exactly what I'm planning on doing on Wednesday. Because at 2 p.m. Eastern time, you got the FOMC rate decision. As you can already see, they are saying they are going to raise interest rate by 0.25. So let's take a look at the CME report. Let's see what they're projecting already with the 0.25. Okay, that's pretty clear. We are looking at a good 83.9% chance and probability they are going to raise interest rate to 5.25 with a 0.25 basis point. And service says It's going to get really, really volatile. This should strengthen the dollar. It should, but you never know what the market's going to do and how the market's going to take the 5.25 because it all comes down to what is said afterwards. You got the press conference coming right off that thing. So all of our coaching students know that, hey, when the FOMC rate decision come out, boom, you're going to have an initial knee-jerk reaction, which we call the first wave. And then you're going to have the press conference, which will be the second wave, which will determine if this is a continuation or a fade. And then you're going to have London session come in. Asian session kind of just keep it ranging, but London session will come in, and that would be the phase 3 that we're looking for to see if that's going to be a fade or a continuation. And then boom, we can get ready to trade after that. So that's going to be on Wednesday. That's going to be the big deal. And we'll take a look and see what's going on with the dollar, possibly what's going on. And then Thursday, we have the euro rate decision. All right, we got 3 bank rate decisions already. We got Australia on Monday. We have FOMC rate decision on Wednesday. And now we got the euro monetary rate decision. And this is going to be a 0.25 basis point improvement. So this right here should strengthen euro, right? But we just had the bank rate decision for the dollar the day before. So how is that going to affect the euro dollar? Well, I can tell you what, if the rate decision on Wednesday and the FOMC rate decision weaken the dollar, we can expect higher euro USD, and it's already looking to be on a bull run. So are we looking to see more higher euro USD? Euro odd, euro NCD, euro CAD. This could be the decision factor. Okay, at 8:15 a.m. Eastern time on Thursday, it's going to be big. Okay. All right, then after that, I don't think we have any more major news that we need to worry about on Thursday for the dollar. For the simple fact, Thursday is going to be more of just a fade or a continuation of the day before, but euro is going to definitely be a big news factor at 8:15 a.m. Thursday. Okay, let me see anything else we have. Nope, nothing for this week. We got that's nothing. Okay, so we got Swiss francs reporting their inflation rate that will happen during London session, and that will impact the Swiss francs. Swiss francs has been very strong, very, very strong. Now, Swiss francs, we're talking about NCD Swiss francs. We got CAD Swiss francs. We got odd Swiss francs. Let's see, odd Swiss francs. We got Swiss francs JPY, and then we got USD Swiss francs. Okay, oh, we got pound Swiss francs. So all of these Swiss francs, I'm telling you, Swiss francs has been like kicking butt lately. So right here, Swiss francs, and then you got odd Swiss francs, and then you got NCD Swiss francs, and then you got CAD Swiss francs. Right, so right now, odd Swiss francs, NCD Swiss francs, and CAD Swiss francs, they've been looking, bearish. Pound Swiss francs, dollar Swiss francs, but this is probably starting to turn around already. Swiss francs JPY is the only one that's been shooting up. I think dollar Swiss francs had a little bit of a bullish one last week or the last couple of days. But we'll take a look at the currency. Hopefully, if you're looking for the right setup, and we'll take a look at the chart, we may want the Swiss francs as much as we want, right? We are looking to trade the trade opportunity of where we believe the market's going to go. Therefore, if we're Swiss francs, when we take a look at it, we may want the Swiss francs currency to be weak. I think if we are at extreme level with those markets. But we'll take a look. Right now, the currency is at 0.2. They're expecting at 0.2. Regardless, we expect to see some opportunity on Friday. Okay. All right, and then after that, we got the big bang. Got the double whammy. We got CAD and USD employment data on Friday, and that will be volatile for the pair. And that will close up for the week, okay? So that is what we have for the week. I hope you guys mark that down on your calendar, on your sheet, what's going on for the week. In terms of next week, real quick, let me just take a snapshot to see what some key news. We got USD CPI data, that's fine. GBP. Oh, we got the pound rate decision next week. We got euro this week and pounds next week. So that's going to give you a bank rate decision for next week. And then that's it. That's all the bank rate decision we have. So basically, this week is 3, Australia, USD, and then we have euro, and then next week is pound. So dollar is going to be already, whatever happened this week, expect it to be set up and ready for it next week. So in other words, if we do not get into a trade opportunity, or if you do not get into a trade opportunity for the dollar this week, well, at least this week is going to set up some really good trade setups for you to take by the end of this week, or at least you're going to have a very clear direction of what's going on to be able to trade for next week and for the remainder of the month of May. Okay, so let's take a look at the dollar with that being said. All right, so let me see. Right now, you can see I'm on the daily time frame for the dollar. You can see that the dollar has been basically hanging around this demand area. It's having, let me just take this off right here. It's having a hard time breaking out this low. It's like, hey, what's going on? Are we going to break it or are we not? Right? We've already came all the way up. We reached that top right there, that swing, and came all the way down, and we got that swing. So which way are we going? Are we going back up, or are we going to break and let's go, right? So for that to happen, we got to think about what the economy has to happen and the other correlated pairs so that we can make sense of this, right? For this dollar to be weak, that means we're expecting a rally. That's important. And correlated, uncorrelated pairs, that means the stock market, gold, BTC, Bitcoin, we're expecting this thing to rally, right? We break this, we're going to rally, right? Now, if we get the dollar to start going up, then that means for everything, let me see, let me make this a different color. If we expect the dollar to start coming back to this high, so basically just coming and staying within this range, which is probable, right? Then that means inversely, we expect stocks, indices, gold, BTC to give us a little bit more bearishness, okay? Because right now we're at a key level to say what's getting ready to happen. And this week it's going to be the deciding factor. That's a good thing. You won't have to wait long, right? You won't have to wait long to see which way we're going to go, okay? I can tell you right now, we went up, had a little bit of a rally, and then we came right back down. And basically, we just kind of like, I don't even say we're just not even, you can say we kind of break that trend line. That's why I kind of like using trend lines a lot of times. Let's just stick with market structure. I think that's the best, surest way to price action. Would you agree? I think you guys would. So here's the key thing. So on this day, I don't know which way this card's going to go. I really don't know at this point. But a simple fact, we have Wednesday FOMC, right? Wednesday FOMC is going to be the deciding factor that tells us. So if it breaks and this comes up here, then I'm looking to short it. Okay, that means I'm looking to go long euro dollar, pound dollar, R dollar, and CD dollar. And I'm looking to short dollar CAD, dollar Swiss francs, dollar JPY. So that will be the deciding factor that tells me if this thing breaks and we get below this particular range right here, I'm ready. Okay. So am I going to try to call it right now and start shorting it right now? Absolutely not. That is not the way you want to do it, especially when you have an unexpected news event that's coming on Wednesday with the FOMC. Because of the FOMC rate decision, let the FOMC and the market makers use this news catalyst to manipulate everyone else, okay? Let the market makers give us the answer. Let the market tell you which way they're going, okay? We don't need to predict and be a forecaster in terms of what we believe the market makers are going to do with the FOMC. Let the FOMC rate decision tell us which way you're going. You're going to go down, you're going to go up. There's no need to even worry about trying to get into the pairs unless you're bored and you have nothing else to do. And hey, you just want to carry in an extra trader, but it doesn't go in your favor and you know how to manage it. Go out by all means. Do it with one or two pairs. Some people are like that. It just depends on your personality. Me, I'm just going to be more patient because I want to be more selective and get my big bangs for my bucks, right? Because if this thing breaks, then I know I'm going to the next demand area. Bing, 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 right there. And I'll just, longer dollar, pound dollar, and let's take the breakout. Okay. So right now, let's wait for more development. There is no key strong areas right now that's telling us it's going either way, other than we're just having a hard time breaking this low. So what I believe with fundamentally should happen with the dollar being strong, with the FOMC rate decisions starting to come up, and they are going to raise interest rate, that naturally and typically should strengthen the dollar. So I would be looking for bullishness on the dollar. So I am going to say I'm looking to be bullish. Not to say I am bullish, but I'm looking for the dollar to show some strength. And therefore, I expect this to be held this week on Monday and Tuesday. And I expect on Wednesday to see some bullishness or at least a follow through to the upside, even if it does dip. Okay. So if it does dip, and this is very, very important, if it does dip, everyone knows you do not jump. Let that thing drop, let it get all the other retail traders. You're waiting for the fade and then the continuation if that's the case. Because if it fades all the way, then that was nothing but a fake out. That's why you do not want to jump, because that fade may be a continuation when London session comes in or afterwards with non-farm payroll. Non-farm payroll can take it right back up. And now you're back stuck with this position because you thought it was going to go low because you heard me say, I'm waiting for the break. Yep, I'm waiting for the break, but I'm also for the retest of that break before I consider being bearish for the remainder of the weeks and months. Okay, I hope that makes sense, but that's what I'm looking for. If the FOMC and fundamentally things happen, that's what I'm looking for. I'm looking for bullishness, and then I can say, hey, if it's confirmed and we're bullish, thanks to the FOMC rate decision, then I'm looking for it to come back up. And let's go back into this range, and then we'll see if the dollar is going to break that area. But I can definitely be looking to short euro dollar and pound dollar for another ranging month, if you will. Because I think the catalyst to me, the way fundamentally should work, is that we may come up here, and then on June is when we get no rate decision, and that's when we're going to get the Fed pause. On the Fed pause, that's when I could say, you know what, I think this is about as far as we're going to go. I don't think we're going to go any more further than that, and I would expect to see bearishness or weakness in the dollar, and therefore remainder of the year. Okay, and that's when we should see more euro dollar and pound dollar take off back up to its normal range. Okay, so that's what I'm looking for. We'll see if that happens. Okay, so inversely, let's go to the inverse correlated market. Let's look at gold, and then we get right into stock. Let's see how gold is doing on the daily right now. Ooh, it's at that all-time high. Let me see here. Let me go ahead and hide some of this marking here. on a daily. Yeah, yeah, we got 100% retracement. We got 100% retracement there. That dollar, I mean, that gold looked like it's bearish. So it's having a hard time breaking this high, right? Having a very, very hard time. However, we have a break to change of character though on the daily time frame. And I think that's important because the daily is going to be the differential maker, right? So we have this low right here, and we're having a hard time breaking that low. Okay. And this is the low of that market structure. And I'm talking about, higher highs, higher lows, higher highs, higher low, higher highs, higher low, higher highs, and then it was just ranging. So that means we have not taken out this previous high. Uh-oh. So what does that mean? What does that mean? Does it mean we're going to break and come back up? I would tell you what, if the FOMC rate decision does have a negative impact on the dollar and the dollar is weak, then gold is definitely coming up. It's definitely going up. However, if you look at this and you look at what I'm seeing here, this is not looking like a very strong bullish gold because of the fact that we're not showing any higher highs, right? It looks like we're showing more lower lows. Therefore, we may have a lower high. Ooh, this could be it. There's a lot of imbalances, and there's some very strong demand areas that can look like a very strong support for this area to come right back into this range right here. And I'm talking about this zone right there. And I tell you what, gold come down. Oh yeah, I'll be looking to buy that back up, right? And I would, put my invalid zone right there. I'll be ready to go, right? I don't think it's going to break. Everything right now from the signs of the dollar on the gold if you're looking, the gold dollar didn't look that convincing because it looked like it was kind of sitting on that bottom zone, but gold does look convincing, especially when I'm looking at market structure and it's bouncing on both ends. Well, basically, to be honest with you, it's ranging, right? We're talking 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Basically 11 days. So we're talking about 2 weeks. This thing really hadn't shown its hand. It's been kind of like ranging. And we'll take a look at our artificial intelligence, which we use for Confluent, to see if we're getting that lower low report from our artificial intelligence that gives us our predictive forecasting analysis with an 86% degree of accuracy, PhD documented. We're not talking about ChatGPT or whatever AI. We're talking about real artificial intelligence connected from neural network from a company who has developed this software, but $4 million into it since 1982. So our artificial intelligence software is pretty accurate. So I'll be looking to see if we're going to be seeing more bearishness, and if we do, I'll be looking to short gold, right? Now, a lot of people is looking to long gold, and I can see reason why, and I can see the justification for it. And I would agree with that if it holds, right? So I think that's going to be the catalyst for us. I think we're not going to be able to see that and know for sure until Wednesday. This right here, this is going to be the choke that we're going to be looking for, okay? So if we break, this is going to be the choke if we're looking for it. And then this is going to be an opportunity to short it based on fundamental reasons on why once the FOMC rate decision comes in and it raises the dollar and it strengthens the dollar even more, that obviously going to make investors happy. It should, but if it don't, and if it holds, guess what? I am going to long gold. I will be looking to trade up to here and to trade up to there and keep going, right? However, I don't think, right? This is my personal opinion. I don't see it technically. It's not there for me. And for 11 days for it to not show any previous highs or even come back to this high here, if it was up here or if it's just ranging up here, I could see some potential, reason for it to want to break. But right now, it's it's definitely ranging. Don't get me wrong. It can go either way. It's been holding on the top end just as well as it's been holding on the bottom end, right? There's no catalyst that says, Leonard, this is going to drop, or Leonard, this is going to shoot up. It's definitely well supported in its demand area to go up, but the stronger demand, I would agree. And if you guys can see, that's all right here, especially when you have imbalances that can be mitigated. That is right there. There's a very strong case to want to come down, rebalance, mitigate those levels, and then come right back up. There's more case for that than in this area right here, for the simple fact there's no imbalance here. There's nothing in balance. Everything looking good. Market saying it's balanced. But if we get that break, I'm short in it. Okay. So I'm bearish on gold unless I see a break. I would have to see this. Be honest with you, I can go down to the lower time frame. Let's look at the 4 hour. Don't have to see that. It doesn't have to go that high for me to be considered being long. Let's look at the 4 hour. And I can tell you, if it breaks this is all it meant to do for me, that this is where it's going. It's holding that level right now. You can see where it's been dropping, and then a little drop, but it's still, that's the area I want to see price jump up. Obviously, I am not jumping. I wait for it to retest. That's where you want to get in. Okay, this is when I'm going to look for my confluences. I'm going to look for my AIs. I'm looking for fundamental reasons, and it looked like it's going to just continue. This is where you want to get in, and that's where I would go along. Okay, so other than that, I am bearish on gold though for now, for the simple fact that I would expect the dollar straight. Okay, unless this holds and it breaks to the upside on the lower time frame, then I'm going long. But as of right now, yeah, I'm just gonna have to say, yeah, I'd be looking to see this come back down. I could be completely wrong, but like I said, I'm not doing anything until after FOMC rate decision. I'm looking for confluences. I'm looking for all my historical data. I'm gonna look to see if we're seeing more lower lows and see like we're going to be pushing below this level. And once it breaks, I'm not gonna jump in. I'm gonna wait for it to retest, and then I'm gonna short it. Right? Look for more confluence, but it could be bullish, and if it does, I will look for confluence in that regard. Okay, let's go to S&P 500 to kind of get a stock market overview and what we believe most likely could happen. And as you can see, we are at supply zone. And this was my analysis here from last week. And it looked like it did come down where I was initially going. It just didn't come low enough. And then, boom, it came up. So that's what it broke. No, it came down to the break of structure there, but it didn't break. And as you can see, I've already had it knocked down, marked down, not knocked down, but marked down for a choke. And it poked, but didn't hold behind. So we're right back at the supply level, which is a very strong level. So let's look at the 4 hour. Let's drop down one more to see how much more it got to go. Oh, just a little more. Yeah, all of this. You see this right here? Very, very important. All of this is still valid in this level right here. All of this is still valid. This whole level right here. So this is all supply, right? All of this is valid supply zone. And I think you guys would agree that, hey, if it holds here, are you going to buy when it just gets right here? Or you should have bought when it was down here, right? You should have bought when it was down here. I think you guys are following me. I don't think you want to just, should it get in this area, you want to buy. If it gets in this area, you should be looking to see if it's going to recheck. Because if it does break out, we got a different story. We are now out of the supply zone. Then again, we're looking for a retest. And then we are looking for this to take off. But wait, hold on. So for this to take off, that means we're expecting the dollar to be weak, right? And the answer would be yes, the dollar would have to be weak. And then we'd be looking for to come up to this area right here. And this would be, believe it or not, the last line in the sand. For what? For stock market or the US market rally, bull rally. That would be the last line in the sand. That means we break this level, that's it. Economy's recovered, we're gone. Everyone's happy, no recession in sight, and we are going back up. Okay, that's what I'm saying. So in other words, this line in the sand right here, I'm gonna mark this off, and you guys can probably see it. But this is the all-time high right here. We'll take that back. Yeah, that's an all-time high. So right, so this is let's go to the daily. Right, okay, yeah. So that would be the all-time high. So what I'm trying to say again is right here, this last line in the sand, right? That's the last high mark here that we can say, hey, because even though we're still in this zone, we still got this area it can play with. In other words, it can still got more room to go. And I would even say right now, it's looking strong. It's a strong bull run. It's going up. And it's been going up for the last few days, all week, right? But we're still in the supply zone though, hadn't breaking up to the point where we can say, oh my God, the market is fully recovered. USD stock markets, it's boom, it's rally. We're on a bull run, blah, blah, blah. 401ks going back and everyone's high-fiving each other. We're out of recession, fear of recession ever happening. Does that feel like that? I don't think the news is saying that. Huh? Everything's still up in the air, right? So I don't think we're there yet. So we still got a little bit more room to go, but that doesn't mean we get too excited. So when traders start seeing this thing go up on Monday and Tuesday, and I would assume it will, right, leading up to Wednesday, all my traders know that Monday, Tuesday, especially Monday, that's trap day. You see this thing jump up on Monday, what you jumping for? It's trapping. It's a trap day. Right? Just no need to jump in on Monday to see what's going on. Wait till it pull back on Tuesday and then jump in on Tuesday. But now that we have a big FOMC rate decision on Wednesday, we have to wait till after Wednesday to see if what's gonna do. But if we break this, and if we ever break this level, that's great. Still can come back down at least to right here, but at least we know we're pretty much coming up to the end of the line in the sand. And everything fundamentally and sentimentally in the market will start to talk. Are we out of the recession, the fear of recession, and therefore we're going to be back on a bull rally, on a bull rally run? And this is what I'm talking about. Right, all 2023, all 2024, we break the all-time high S&P. And everything is peaches and cream, no inflation worries. The Feds are now starting to lower interest rate, dollar and bonds are yields starting to come down, and finally, and everyone can exhale, and 401k start to recover, and the stock market is in a very safe place, and everything is kumbaya. Are we there yet? Doesn't feel like it, right? It doesn't feel like it. So I still think there's some downside opportunity still coming, right? So I'm just not convinced still. This thing can be going up for just as 2 days, right? We had this 2-day drop and I thought it was going to keep going, but it did a 2-day rally. So whatever news catalyst was positive, it had a positive reaction. So for the last 2 days, Thursday and Friday, it basically went back to the previous weekly high, right? But we're still in this little supply zone that's still valid, right? We're still in this little supply zone. Now, keep in mind, we do have a nice fair value gap, right? You can see that right there in the lumen corner of your eye on a daily time frame. That is still there, right? So that means that we could come up and And I think we are. I think we're going to come up. We had two very strong push upside. We created a little bit of imbalance on the way up, as you can see right here. Zoom in. We got a nice little imbalance. We got two nice imbalances down here still. That's why I thought it was going to come down, at least mitigate these two imbalances, but it didn't. It left that unturned. Hint, hint. It left unturned. Now look, there's no other imbalances down here on the daily. Not the 4 hour and 15 minutes. Look at nothing clear right here. Yep, these two. So these two is concerning. That should leave you a little bit of a clue that we may still have some more downside opportunity. Then what the hell? Why is it going up? Well, it's, hey, it's called manipulation, right? This is to get you to do what? Get you thinking it's going along. But we as traders here, and I just mentioned, this is the line in the sand. So there's no need to get excited until we break that line in the sand, because in the meantime, this is all supply right there. And it only takes one little candle to get that, and that can be an FOMC and rate decision that can just easily pop up and get that little candlestick right there. That'll mitigate that little imbalances. And then guess what? Then we can start to see, oh no, recession, you know, whatever. The market is coming down, right? And it could. Not sure. We're not for certain. We're going to have to see what happens here. Are we going to break and retest and hold and then hit for that line in the sand? Or are we just going to fake out, manipulate, regress on FOMC, non-farm payroll, shoot it all the way down, right? If that's the case, this is what I'm targeting, and this is what I would like to buy and go bullish. But right now, I am not bullish. After all said and that, I just did this. I just went from here to here, and I'm holding my story here to say, look, I think there is some downside possibility. I'm not certain, but I'm not convinced that I am ready to go long until we break this. I don't need to wait until it gets up here, but I like to wait until this right here happens. We retest, and then I'll be going long. And this right here would be just a scalp, to be honest with you. This is still not to say we're bullish, but just to be, hey, let me get a little money of this right here, because there's no need for me to wait 1 to 4 weeks for this to turn around. If it turned around, let me go ahead and get a little money on this, right? I don't mind getting that up, because I think it's going to have a little bit more upside, and then before we come back down. But I would say once the market comes back up here in this area, that's when I will be able to determine, are we going to be coming back down, or are we looking more bullish? And this is not going to be able to tell me much until we get here, because right now, this looks like we are going more up, okay? We are getting ready to take out this high. The price is right there right now. Price take out this high. We are going a little bit higher, but I don't jump, right? This is Monday, Tuesday, and then I could see Wednesday happen, and boom, it takes. So why would I even jump thinking about being long on S&P, NASDAQ, the Dow Jones? Why would I be even looking to go bullish at the top of that, knowing that we have FOMC rate decision coming on Wednesday? And I think you guys would agree with that, and you would want to wait. I would agree with that, okay? So that's what I'm saying right now. I'm bearish on S&P for stock market right now. However, that doesn't mean I'm ready to sell. That means I'm looking for sell opportunities. And right now, it's not a sell opportunity. This is a bull opportunity. This tells me this got more upside. But the point is, how much, right? How much upside here, at this imbalances, or are we talking way up here now? I don't think we're going to go way up there. I think this is probably by as high as it's going to go, but this is definitely doable Monday, Tuesday, even Wednesday, okay? So right now I'm still looking for some more opportunity unless everything confirms we're going back to the upside. Okay, and that'd be the same thing for NASDAQ and US 30. I don't even need to look at that to see if that's the case. Okay, let's look at oil real quick before I go to Bitcoin. I haven't looked at oil in a while. Ooh, oil looked like it did not continue down. That's what I originally had. I had it to where it would come down to this area, and it came pretty close, came to this demand area, and now it's looking bullish, right? Just look what it's doing. It is definitely looking bullish there. So we got the low, and just created a nice imbalance there. We hit this high, great, we pull back, and we're holding that level there, and it looked like we are probably going to this particular level. So 95 is what we're looking for. I think it's going to range. We're back in this range now. So unless we break this particular level, I would say I am bullish on oil. I don't think we're going to break that. I think we're going to come close. We may come down a little bit. I can see it come down right here. And if we come down right there, we're talking about around 800-ish. Even if we do come down, I think this is going to continue going back up. Okay. Just look technically, it's could continue going back up. We already have the OPEC fundamentally had already stated that they're cutting supply, right? So that is going to tighten up supply a little bit. I think the demand for oil, we got summertime coming up, we got a lot of travel, but we're not sure exactly how that's going to play out fundamentally. But I can tell you this, that with fundamental reasons of OPEC cutting down supply, reduce or tighten up supply in the market, tighten up the production, that would tighten up supply, that ultimately raise prices. But I think the other piece will be Canada's currency strength. As Canada pick up strength, right, we may see this go higher, and then we go back into this range of the 90, and I can see that coming back up to this range. I don't think we're going to come this high of, I would say about 95. I don't think we're going to come that high, but I do think we're going to take out this high. We're going to come back into this range. I think we're staying in the $90 range here, and then we're going to come back down. Okay. I think that's going to happen in the later part of 2023. But I would say I'll be looking for more bullishness. This would have been a nice trade long. This obviously right here, this would have been a nice trade short, but right now it's like in the middle. I would like to see it come down here before I take it a buy. So a little bit more downside for me right there. And then I would be taking it or like a buy it from there. I would look for a buy. I would look for some reaction and look for my AI report that can give me some confidence to look like it's going to be bullish. And if we're going to hold that level, then I would be willing to take that back long. Okay. So right now I am long-term bullish on oil, meaning like midterm, but I want to see more very immediate short-term. I like to see more downside, and before it goes back up, it might hold right here and go up. That's fine. Obviously that would have been a great sell, and it dropped again. I would have sold it again, but this looked like it's going to come back up. So we'll see. So I like to see more oil bullishness. I think it's going to come back up here to this $85, $90 range before it comes back down. Okay, now let's drop all the way to Bitcoin. Let's see how that's going. That was my long-term outlook. And it looked like it's holding around at $29,000 range. And the bottom of this is around the $25,000 range. I do not think it's going to come down to this $20,000 range. I think it's going to stay within this $25,000 range. So I think the FOMC rate decision is going to push that. they're going to push that, and it's going to come back down here in this level. I think that's going to be the test of Bitcoin around this particular level of 25. Like I said, I don't think we're going to come down to 20,000. I think we're going to hold that level pretty strong. And I think Bitcoin may survive this 25,000, this next FOMC rate decision. And then in June, boom, we're going to break out 40,000 coming soon. Okay. So a little bit more bullishness to Bitcoin. I don't think we're going to break this high yet. It looking like it wants to, but then again, I think this is more downside about there. And then June, we'll be willing to break that back up. Okay, let's go to the Forex pairs. Let's start with euro dollar. There you go. We're in that supply zone. Right there, main supply. Make that a little bit bigger. All right, 20,000. Look at that, having a hard time breaking that area. Okay, so again, this is all dependent on what happens with FOMC rate decision. I'm not going to do anything other than just wait. It looked like it created another higher highs. We've been on this uptrend since late March. So we've been on this little rally uptrend here. And we've lightly taken out that high. So we have a new higher high. So right there, we got that lower lows right here that needs a break. If we feel that the dollar is going to get strong, then this is what we need to see. We need to see that break, a hold, and then come back all the way back down to about the 106, 105 mark. This is a very good level to go long. Okay. This is what I like to see. I like to come back down. Right now, we're already past 100% of extreme level. This is a good area to start looking for shorts. Okay, so with that being said, I am bearish. I like to see that come back down. I don't think it's going to take out that high. If the dollar, if fundamentally the FOMC rate decision is increasing the dollar, I would expect to see dollar strength, and therefore I like to see this hold. It could range a little bit, but this is in a key supply area, has not broken this area. I think it's going to come down, give us a nice little pullback. 50% of this particular move, swing up, swing down, will be at least right there of the 108. So I do expect it to come back at least that, right? Unless, you know, anything else tells me that it's going to keep going up until it breaks this zone. In fact, it has to break that zone very, very strong. And this is the zone I'm talking about. And then retest, okay, before it goes back up. And that is a big zone. We're talking about a good 100 pip zone. That means it needs to break and go up from where it's at right now. It needs to go up 175 pips for me to convince, right? And it can easily be done. When? FOMC or non-farm payroll. That's the only thing that can take it past its 80 pip average daily range, 85 pip average daily range. And right now it's having a hard time breaking that high. Been raising a little bit. I'm looking to see FOMC rate decision and dollar kick in. I'm looking for this. And if it breaks, then I'll go along. Okay, pound USD. Ooh, we're right in that zone. In that zone. Where's that? Back. Yeah, we're in a key demand, key supply area. That's where we're at right now. That's a very strong key supply area. Very key supply. And it's having a hard time breaking that, as you guys can see, right? However, it did create a little bit of a higher high. I see it. And that's a very strong high. But we're still in supply. It's nothing telling me that we're going higher, other than we just created a new high, and it could slightly go a little bit higher. Now, pound rate decision is not happening until next week, so it's nothing going to cause pound USD to go higher other than one major currency this week, USD. So this is all going to be about USD that happens for pound. Now, if the FOMC rate decision fundamentally happens, again, if I believe it's happening what I think it's going to happen, and it's all holding at supply area, then I am looking for this damn thing to drop. Okay, at least 50% of this move, and we're talking about about right here, around 1.22000 at least. And anytime in this area, I would like to see it, and I would like to buy it from there. So if it comes down here, that's what I'm looking to buy. This used to be a nice area, 618, 786 area. Down here would be even better. I will buy it there. I'll buy it again. I'll be looking to go long. But right now, I am not looking to go long on pound dollar, if that's what you're asking. No, not right now. It would have to break up here for me to consider going long. I mean, I'm talking about a break here. Oh, not just a break, but it has to, yes, retest. Okay, that means I want to see a hold above this zone here. Okay, right now we're in supply. In fact, let me put my note there to remind myself when I'm looking at my chart, where are we? Right, where are we? And we are in supply area right there until we get down to this level. And that's when we can get into the demand level to look into the discount area. So pound USD, I'm looking to see what it does on Wednesday, looking to see if it drops for me. Odd USD, odd USD. Okay, so with the odd USD bank rate decision on Tuesday, this is going to be a combination of odd and USD news, right? The U.S. reserves are down. Yes, I'm sure. I'm sorry, I didn't see your comments. You think the U.S. oil reserves are down? Yep, but it is strengthening the oil prices right now, and I think it has much to do with OPEC supply, strengthen the low end production, therefore strengthen the supply, therefore prices are starting to go up, and that could be a combination of oil reserve as well. Okay, so with odd USD, what do you guys think? Yeah, I think it's going to go down. So obviously we haven't broken this high. We came right back down to this low. We've been bearish, and it's looking bearish, right? We got this high, equal high, low. We broke that choke right there. That was a choke. And we're creating a lower low, lower high, lower lows right there. That's what I'm thinking we're going right there. Okay, so I'm bearish on odd USD. We're right at the 50% mark, lower than the 50% mark. That's good. We're in that discount zone. This would be a perfect area to go long. Right now, we should be looking for more bearishness, but definitely once it's starting to get in this area, we should be looking to go long and be bullish. But right now, I think it's going to be more downside. NCD USD. I expect NCD USD to be bearish as well. We have this high, we got this low, we didn't take out this high, now we created a lower low. It's looking like, hey, guess what? Lower highs, lower lows, and let's break that and let's come back down here. Okay, so this is what I'm looking at. We're still in our premium zone. We haven't even make it down here for me to consider on a daily time frame for me to start looking going long, especially we haven't broken out this high. So I think NCD net employment data coming in on Tuesday, agent session, I think it's going to weaken along with the USD strength. Me, everything's pointing to a dollar strength so far. Let's look at USD CAD. Okay, that dollar CAD, dollar's already taking this in, but I think this was more about CAD weakness than it is about dollar strength, even though we did have a stronger dollar on Friday, right? On Friday, and CAD wasn't too bad. CAD was like, stronger than a dollar, so that gave us a little bit of a downside for 2 days, but all last week we pretty much was doing pretty good. So that dollar CAD looked like it was going higher and higher and higher. It looked like it's pulling back. So other than that, just definitely just demand zone, which is a perfect zone to go long, was great. But we got some imbalances here. And I think we are going to see more, I would say more weakness, probably leading up to Wednesday. And then I think we're going to come back up here. Okay. So to me, more bullishness to US dollar CAD. I don't think we're ready to start dropping yet. This is the line in the sand for dollar CAD. When we break that, yes, and I can't wait, because either we break it here, sorry about that, either we break it here or we break it coming down. Whenever that happens, we're going down. We're going to go down for a while. Right? We're talking about a nice 700 pip drop there. From where it's at right now, it's already looking at a 968 pip drop. But I think we're going to revisit that supply zone to give us about 1100 drop opportunity. So a little bit more. It'll probably come back down a little bit more. It's already been coming down already on dollar CAD with a nice, nice 1 or 2 day move, and I think it's going to come back down a little bit more right there. I think it's going to cover this imbalances. It may even come back and do a low double triple bottom, but I think it's going to come back right here, come back right back to the supply, and then we'll come back down. So a little bit more downside to dollar CAD before it goes long, but I would say I'll be looking to long dollar CAD maybe by or after Wednesday. Okay, dollar Swiss francs. What is dollar Swiss francs doing? Okay, I'm out of this trade. So this ooh, Swiss francs is at a key demand area. I hope you guys got some opportunity to buy. That was Swiss francs all breaking that short. Nice. Okay, now what we're doing? We just came back and did a retouch. Okay, I would say if the dollars remain strong, we got Swiss francs currency rate decision coming in. Not until next week. We got CPI data coming in this Friday, but no, we don't have any Swiss francs bank rate pound this next week. But we got Friday CPI data for Swiss francs, right? So this is what I'm thinking. I think this is going to hold. Having a hard time breaking it. Dollar strength. This is still pointing to dollar strength to me. Could this be going lower? It could. This is dollar Swiss francs. Let me look at the weekly. It could drop, but right now it's looking mighty set up for a nice buy. And I would want to buy here from a market structure standpoint. It's holding, but dollar strength would have to support that. So, and I'm going to lean with that. Still going in, everything's kind of supporting the dollar strength on Wednesday, and if not by Friday. And unless it completely fails and dollar just falls out of nowhere, right? Even despite of the 0.25 basis point strength, then I'm not switching my bias until that happens. I would need to see more confidence, but right now everything's is still supporting possible dollar strength. Okay. Ooh, I can see the dollar took advantage of that yen's weakness, so this is going to give us some good opportunity to start looking at the yen. Yeah, oh yeah, this is still with the dollar strength. I think we are finally going to break this, right? That zone right there. I think we're going to break that level. This is the zone I'm talking about. I think we're going to break that level, and I think we are going to go long, and therefore I am banking on a break, retest, maybe that high, but I like to see it somewhere in this level before we drop. So there's looking to be more upside to me on the euro yen. This is going to be more about dollar and yen than the other currency. However, I would be not looking to short dollar yen until I see what happens after Wednesday. Okay. On Wednesday, if this continues to go up, then I'll just leave this alone. I'd not be ready to short dollar yen until it gets in this zone, right? This is the discount, this is premium. So until it gets to the premium zone, right now it's starting to approach that. I think Wednesday going to be the catalyst to push it above this 50% and this zone right here. This is the zone I'm talking about. It needs to push that above that zone. This is the line in the sand for me, and I'll be looking to go long right now. I'm not looking to go long. I'm looking to see what happens on Wednesday. Until that happens, I'm just going to stay out of euro yen, but I would like to see more. I think it's going to be more upside for euro yen. So that's being said, let's go to the other yen pairs. Let's start with EJ. Look at EJ. Look at you. Wow. All right, let's go to the weekly. Now we are at extreme level. Look at this is what I'm talking about. This is what I'm talking about by extreme levels. Let's go to the daily. So this drop right here puts us at extreme level right there on the 4 hour. That's brought that. On the daily, from this level down, that swing high, swing low, we came up to 100% of that level as well. And this could be it could be frustrating for contrarian traders like myself, who's looking to short, and this would have been a good area to short, to be honest with you. Not a bad area to short. That would have been a nice area to short. However, we exceeded that, and that's because of the news catalyst for the yen, right? We don't have euro news until Thursday for monetary policy. So let's go to the weekly, because now we're at a very extreme level that we need to consider the weekly. And based on the weekly, we have some room to go. Yes, we do. So we're in supply area right now on the weekly. Key supply area there. And we got key supply area there. Okay. So we're at extreme level for Euro USD. And to be honest with you, I would be looking to short. Meaning I'm looking for signs like this right here. This is what I'm looking for. I'm looking for that type of sign. Okay. That is the sign I'm looking for. And do we have it yet? No, we don't. So that means I'm looking for, this is the sign of what I'm looking for. The study this candle on the weekly. This is what I'm looking for. I'm looking for a top. I'm looking for an opposite candle. I'm looking for a second week push and a break of structure. Like that. This is where you want to short. Okay. Now, someone can argue and say, well, you're giving up all this room right there. I am. But I tell you what, I got all this move, right? I can give up this move. So this is called the frustration move. Right here, this is the frustration zone because you don't know what's going to do. And if you take a buy, this thing can go up on you. I mean, if you take a sell, this thing can go up for you, right? You want to avoid this at this extreme level on the euro yen if you're not in euro yen yet, right? You want to avoid this. So you want to get that break because if you were to see this and if you were looking back at this particular pair, right, just say hypothetically, and you saw this, this looks like it's going to keep going up. It could, but when you see that break right there, that's telling you that this is a higher probability it's going to keep going. That, my friend, is a lot better trade opportunity than trading that. Right? I would assume, I don't think anybody wants to short that. I don't think anybody's looking to go, oh yeah, that's a short. No, that's a sign to look for short as it's starting to be an extreme, right? And then when you get, and let's say hypothetically, you see that, you say, okay, that's a pause candle that looks to be where it's starting to show more signs of bearishness. And that right there would be your confirmation right there that it's going to be short, right? So that is, to me, is a better opportunity to short, right? So then you can put your stop loss there, or you put your invalid zone there, because if it goes up, then you can be ready to hedge it, or you can get stopped out right there, and that'd be a good stop out position. Okay, so that is what I'm looking for. And if you look at euro yen, we don't have any of that. All we got is a bullish strong candle going up. Okay, that means it has not paused yet, and there's still more targets for it to go. Okay, so with that being said, I can see more possible bullishness here for me in this zone. I do not want to touch euro yen, and I would wait for euro yen, and I am not touching it on euro yen. I would not be willing to touch this because of the fact that we have upside potential, right? This is upside potential. So euro yen and pound yen, I mean, euro yen and dollar yen right now has upside potential, and therefore you would want to wait. You got to wait for confirmation. We're in extreme supply level. You don't want to start, predicting tops yet and predicting tops. You want to wait for confirmations of tops. Okay, that's what I'm saying. And the reason why I said that is because it can do this. Say, for instance, because you got supply and supply level, you get into a, let's say, for instance, you get into a short right now. Okay, could it go down? Sure, it could. Could it go up? It's a higher probability it can go up because of the fact that it's already showing 3 or 4 days up. Number one, from technical reasons, and two, JPY is extremely weak, right? So there is more upside. And number three, the third reason why it could potentially go up is because we have more upside potential targets of supply, right? And we've already exceeded that previous high. So Everything else is game right now to go up. So there's nothing telling us that this is time to sell. There's no sign to say sell. Everything is saying, hey, I'm still moving. Okay. So you don't want to get to a position to short now, and this thing gets frustrating with you, and it goes and does this one more time, right? And it does that. Until it does this, and this is what we need to see, right? Until it does this and this, oops, that's just a double top or a tweezer top. Until it breaks the structure and hold, that would be even nicer. Either way, that's what I'm looking for, especially when you're in extreme level conditions. I hope that helps. Okay. So as of right now, I'm staying clear away and I'm watching and I'm waiting. Okay. So I'm going to be putting my chart alarm. In fact, I'm going to put a chart alarm right there on your USD. And I'm looking for, right, you see at the end of that candle right there on its, this is the daily, this is the weekly, and go to the daily. I'm waiting for the bottom of that candle. I'm looking for it to EJ, and I'm looking for it to cross down. Okay. I'm looking for it to cross down for I can see confirmation. This is a nice bullish candle. I can see it pull back a little bit, but I want to see it hold and stay below this level for it to come back down. If it don't, and it keeps going up, I'm gonna let it keep going up. I'm not gonna try to chase it until I get my pausing candle, right? I already showed you what that is. Until then, I'm just gonna see this keep going up until it gives me a top and a sign of reversal. Let's go for pound yen. Ooh, pound yen did the same damn thing. Look at that. Look at that bull candle. Now, the good thing about pound yen is that we have this particular high of October 22 last year. Let's look at 2 weekly and see if we got more upside potential. And we do. And we got some really good, strong potential right there. And you got some fair value gaps. You see that? See, all of this right here, that doesn't make me feel warm and fuzzy. And it shouldn't make you feel warm and fuzzy about shortness either. We got all of this imbalances right here, clustered of 3 fair value gaps right there. And we're already, look at, we're already with the news on Friday still fresh. We're already getting ready to take out this high. We're already at that high right now. So to me, I need to see a reversal. I need to see some signs. Other than that, I think this is going to potentially go up here, right? So all of this is potential supply zone for me. So I'm not convinced we're ready yet, and I don't think we're ready to come down yet. So with that being said, I'm gonna pause on pound yen, and I need to see some signs of reversal. So I'm gonna put go back to the daily. Yeah, I want to see. I'm gonna put the chart on right there. I want to see this come back down at the bottom of that candlestick. So GJ crossing down. It's kind of coming at the bottom of that candlestick for me. It's considered, hey, maybe it is coming down. So until they hit my chart along, I'm not looking to do anything on pound yen, CAD yen. Look at that. Same thing with pound yen. We got some fair value gaps here. Take a look. We got fair value gap there. We got fair value gaps here. This is on a daily fair value gap there. Okay. Now, if I were to take my premium discount zone from here to here, we're approaching that 50% zone, right? So just look at that candle. Oof. So right here is when I'll be looking to consider shorten CJ. Other than that, I think we're going to break this. This is already showing signs of weakness. I think we're gonna come here, right? So that's what I think. I think it's going to continue to break. I look for my AI report closely, and that at least give me some signs of when I should start to see lower lows, and that's when I can get really confident with the timing and forecasting based on my AI report with the assistant of my AI report to see if we're going to see higher highs or lower highs. And if we see higher highs, I'm going to let this thing run. I'm not going to chase it to highs. I'm going to let this thing run. And I'm not going to let it get to me like it did last year. And I'm going to wait until it gets into this particular zone. When it gets into that particular supply zone, that's when I'll be looking to short. I think any one of these are very good areas of target for sell, and I'll definitely short it there. So in other words, I could short it right here and be wrong, and I'll be perfectly okay with that. I'll wait, like right here. Right there is what I'm talking about. I could see right there. I can wait for it to short right there, and I could be wrong unless I get a real strong candle like today and it breaks up like that. Then I'll just wait. Right? Obviously, I just don't automatically short just because I see a candle that reached my target. I'll wait. I'll wait to see if it's going to go to this target. But if it starts to hesitate, then I'll short it, and then I'll put another pending order sell right here and cost average that in. Okay, the likelihood of this coming way up here is very, 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 very low. And even if it does come up here, this has a very strong tendency for it to come back down from there. The reasons why? Let's look at the monthly. That's why. Because this is a very high level, right? This is a very extreme historical level that we haven't seen since 2014, since we and May. Okay. But as of right now, going back to the daily, I think there's more upside dollar strength. Expect a little bit of CAD weakness, but I think this is going to be more about yen weakness or yen weakness. And number three, we are not yet in our premium zone. So just it's looking like it's supporting this to go a little bit higher. So again, I'm gonna wait. I got my chart on ready to go right there. I'm waiting to a target to come back down, and then I'll be waiting to short it. But if not, this is my area right here to short. So I'm going to need more time to develop for me to be ready to short it. RDN. Ooh, look at RDN. All right, so we got some imbalances here. We got a nice supply up there on the daily. Yep, same thing. I think once we get up here in this area, this is when I'll be looking to short it. Right here. That'd be a nice area of support right there. A supply for me to short. Okay, so again, bullishness, obviously it's looking good. It may take out this high, come in this area. That's when I'll be looking to short. I don't think odd strength is going to be strong enough, but I think it's going to be stronger than yen, right? Okay, so we had NCD look like it's doesn't want to go any lower. We got a very strong area of supply there. I don't think it's going to come up here, but it could. There is a big area of gap right there. That's pretty big. Oh, yeah. That hasn't been mitigated. Right there. That whole area has not been mitigated. I have to see it come anywhere in this area. Okay. Between odd NCD and NCD JPY, to be honest with you, I don't think any yen credit are looking to to go short anytime now, but I would say I would not want to buy either, even though I think there is potential upside. I don't want to chase it, right? You could have cut it down here. You don't want to chase it up here. You're not sure how much longer it's going to go. It could go up here. It could pause right now. To me, with the yen crosses, they're not long. They're not long opportunities. When I said it's looking like it's bearish, they're at supply area. Pound yen. Pound yen, it's at a key supplier. It's at the top. I don't know how much more. CAD JPY. KJPY is right now at a very key supplier. I'm not sure if it's going to go to the next supplier. It's got to break this area first. So just to me, not a buy opportunity. It's more wait and see if it comes in this area for a sell opportunity. Odd yen, it's same thing. I'm not sure if it's going to pause, but if it breaks, I'm not sure how far it's going to go up. You know what I mean? So that's why I don't just right here for me is an area of sell zone. That's what I'm saying. And it can pause in anywhere this area. So for me, I would say I would want to wait to be in the sell side opportunity here, 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 especially here, right? So all of this area right here for me is sell zone opportunity, right? From this supply and this supply zone, right? I want to take it down to that demand zone. That's what I'm looking for. The real move is down here. That's the real move. That's the move I want. I want to move down here. I want that 1400 pip move. I want this move down here. So that's what I'm looking for. Okay, so we're going to see a little bit more bullishness, but I'm not convinced that we're there yet to consider going long. Not yet. I think there's going to be an upside to more yen, but I think it's going to be more patience for me to wait. Chef yen, this is an all-time high, right? And I talked about this last week, and if you look at the more data here, we haven't seen this high since 2015, and before that, going to the weekly chart, we haven't seen this since 1979. So we're right there in that supply zone. So if you think about it, this is where you want to buy. I don't think anyone wants to buy at the top of an historical charting market. No one. I don't care if you're thinking about to get 100. I don't care if it goes 100 pip. I do not want to buy at this strong supply zone, right? No way in hell you're going to catch me buying that. Nope. So if you're not going to catch me buying it, what am I going to do? Well, you're just going to catch me waiting, right? You're going to catch me waiting. I'm not buying this. Not when it's looking like that. They can come down at any time now. Anytime now. Go to the monthly. It doesn't even have any reference point for me right now on the chart. So go back to the daily. And this is what I'm going to do. I'm going to put my chart alarm right here. Right about 151, let's say 151, 550. In fact, 151, 500. Let me go down here. I want to cross it down, and that's going to be my chef's LPY pair. Okay, so out of all the pairs, Chef JPY would be the one I feel the most comfortable to take the trade first, to short it, because of the fact that I don't think this has a lot of room to move to the upside. Sure, historical move shows that there is a potential upside of about maybe that much. That much looks pretty good, right? We're talking about another 400 pips. That's possible, right? I would agree with that. But there is no clear reference point in the last 7 years that it can go with a very strong probability versus, right? Not saying it can't, versus NCDJPY. Look how recent it is. Look, this is recent. Of course, right here, this is just as last year. RJPY. This is very recent. CAD-JPY. This is all last year. Very recent. Pound-JPY. Pound-JPY, I like this one because the reference point is not that far away. It's 2015, but it's a lot further than CAD-JPY, RJPY, and NCD-JPY. How about UJ? UJ. This is 2014. Okay. So all of these are an extreme level for me. So if I was to put it into a category of pairs that I'm looking to short right away, would be CFTC. That'd be the number one I'm looking to short. Then I'll be looking for pound JPY and then euro JPY. And then after that, then I would say probably CAD JPY. And then you have odd and NCD. So those are my last two. In other words, I could skip trading those three and just focus on CHF JPY, pound JPY, and euro JPY. Okay? And I just explained my reasons why, and hope you agree. If you don't, I'm fine with that. You pick one that is most comfortable for you. You may be more comfortable with more closer reference and said, I like this better than long-term reference in terms of like CHF JPY, where there was long-term preference. 2015, we're past this last year mark. The reference point for further upside is last year, 2014, 2015, which to me tells me the longer the historical retest of those area, the stronger of the area for demand to rebound to lower prices. That's why I'm saying CHF JPY, Euro JPY, Pound JPY has more of a demand for lower prices once you get up to those high historical prices of the yen being that extremely weak with those particular currency pairs, okay? If you look at the yen index, let's go to the yen index, which is right there, Japanese yen index. You can see where we're right here at this area, and therefore I'm expecting look like more downside at least. And this is on the yen, right? Yen index. This was yen last year when it went crazy before it started to do some Japanese intervention to push the yen currency, and then it went weak. Got a little bit of strength, and now we're back to the extreme weakness again because of the yen recent lower interest rate, right? But I think we're right back to this level, which I think, and I believe the Japanese currency are not going to allow it to go this low. I think this is about as low as it's going to go. So this is the line in the sand that I believe that the Japan is going to allow that currency to drop that low, and that's about as low as it goes. If it goes lower and the other currency goes higher, then I am targeting this, right? But as of right now, this is my zone. This is where I am looking for yen to go no lower and hold that level before Japan start to do some type of Japanese intervention and start pumping the yen back up for strength. I don't think they wanted to go with this low ever again. It's never been that low historically. And we go to the monthly. You can see that's about as far as I got for Japanese index. This is the lowest it's ever been since 2000, right? So that's what I got right now for data for 2000. I don't think I got any other. Yep, this is for Chicago Mercantile Index for the Japan Index. This is by as far as I go. It may have went lower. I'm not sure if I have to look at another native data feed, but this is by as far as I got for 2000. Hasn't been this low since 2000. I like to see 2015, which I think it did went kind of low, but I think that's about as far as it went. But regardless, this is the lowest it's been since 2000 of what we have right now. And this is extremely low. This is when the Japanese and Japan start hollering about the irrational of the forex market, and they'll start to do Japanese intervention. But right now, they're approaching that swing low point of March earlier this year. We're right back to that low. We can go a little bit lower, but we still start to see, Japan starts kicking in with some intervention possibly again. That's why I'm not looking to short those pairs again until it hits my alert, right? Because I don't want it to short and then keep going. And like for instance, like I said, I don't want to get into an opportunity for, let's say, pound and see pound yen again. Let me go to pound yen. I don't want to short right now, and this thing goes up, and that's short, and this thing goes up when I got another high supply that it could potentially go to. Why would I want to start shorting now until I get confirmation after I got my short alarm right here? So start to see some signs of stall, and I see some break of structure. There's no need to even consider getting into this trade and waste my time. Okay. All right. Hope that helps. Let's look at some other pairs. Euro odd. Just quickly look at these pairs here. Ooh, ooh, ooh. Boy, Euro odd is just screaming. You suck. That is nasty extreme level. Extreme. Look at, let me go here. I'm talking about what I'm talking about the extreme. Just go to the 4-hour chart. I'll go to the right here. You see that's extreme right here. He's right there. That's extreme number one. This zone right there. And then you can go a little bit higher from this swing down. And now you got extreme number two, right there. So it broke this level, and then it broke that level with ease. Okay. So now we're in extreme level. And if you've been shorting your odd, I can only say keep the faith and hold on. Hopefully you have that and you trade it small, because and hopefully you get a little bit of pullback to get out, right? If you short it here, let's say for instance you short it here, well, hopefully when it got up here, you shorted it again and you should have broken even. You should have got out, right? And if you hedge, that even help you. Okay. All right, so we're at this level here, meaning we're at this particular level here, right? We hit that high. I think there's more potential upside, even though we did have a little bit of pullback. I'm not convinced yet. I'm not convinced until we break. We barely got a low here, right? So I think this is going to go up a little bit more before we start to stall. I think we're going to touch this area. I really do. And I hope we do. Not for those who are already short, but for my sake, or for those who have not got in yet. I'm telling you, if it gets here, I think everyone who's looking at and watching this video are going to say, I want in. I want in right there. Okay. Even if this thing goes, even if this thing goes higher, right there, which is this is a very dangerous area. Right. I would like to see an opportunity to short here in this area. This, oh my God, it goes higher than that. I'll be sick. I'll be actually sick. So, to this right here, we're talking about a good 1,200 pip long. Let me put another zone here. Right there. Okay, so this is what I'm talking about. This is high, medium probability, low probability. This right here from where we are right now, you got 591 pip, it can move. From here to there, another 1,200 pip, very probability, but it's I want to say low, extremely low. 2,000 pip move, really? To me, I'm telling you, it gets right here. I want in. I want to short. That's going to be where I'm going to short because of the fact that it already broken this, and I didn't see enough for me to get into the trade yet. Right, it had not broken any choke yet. It's been doing nothing else but giving higher highs, and it has not given me enough opportunity or convince me. Like a higher high, it came down, did not break and stayed. It went up, created higher highs, higher low, did not break and stay below. It gave me another higher highs, higher low, did not break and stay below, and now it's giving you another higher high. It's going to give you another higher low, and I think it's going to go up another higher highs. Right. So we got Euro news this week with the bank rate decision, and we got Australia's bank rate decision earlier. So you're going to see right off the bat what happens Tuesday, right? So if Tuesday break this, and if Australia's currency comes in strong, and this comes lower here, that's awesome. I think that's going to be great. However, I need to see it stay below because it has not been able to stay below, right? So I'm going to put a chart alarm right in this area for me. Which is in this zone, because if it comes down, then this is the choke area. I mean, because this is the recent swing low here. Because right now, this may not be a low. This right now is looking to be a low, but it needs to create another high to confirm that low. And it does, long as it doesn't take that low, then I'll be ready to short it there. But just not confirmed to be a low yet. It can still continue to drop. And if it continues to still drop, then this is my choke area, and this is where I want to see stay below for me to go even lower and lower and lower. Okay. Just right now, like I said, it's been doing nothing else but giving you higher highs, higher highs, higher highs. So it's my chart alarm right here. In fact, I'm gonna put it right at the top of that swing instead. Let me see what price I want to give it. Let me go ahead and give it. Yeah, that's fine. 16400. for euro pounds. I think it's going to go a little bit higher. How about pound odd? I mean, that was euro odd. How about pound odd? Ooh, same difference. Same difference. We got like double stack of supply, which means all of this is a very strong supply area. And then we don't have another supply area until about right there. And then we got another one right above it. So this may continue to go up a little bit. This right here would be a perfect place to sell. Right there as well. But right now, this thing looks like it's just giving you, it has not breaking structure yet. Just higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, way higher high. So I need a about 865. GA. That's kind of that's low. I like that. But I want to give me an early alert. I'm gonna put it right back up here to 86,700. Now that doesn't mean I'm gonna short it right there. I want to look for and give me a chance to look at the chart and see what's going on. And maybe odd news did turn out to be stronger. And therefore this is now finally start to confirm. And then I will be looking for a chart, and then I can a choke, and then I can look for confirm, because right now it is at a very key supply area right now. So anything can happen. So I did put a short alarm. I'm looking for it to break. Again, I need to see confluence. I need to see break of structure for me to short that. But right now, I think it's going to be a little bit more upside before it comes back down. There you go. This is starting to look a little bit better. Right there. Yes, nice. You see that? That's what I'm looking for. This is what I'm looking for. This is a nice pattern. I like that rejection. Now I'm looking for it to hold. Well, I'm like in euro odd at this point too. So yeah, I'll put a chart alarm right about that level. Get into a sell opportunity here. Crossing up. Okay. I think this is going to go down more. I'm definitely going to put this on my sheet. This is definitely looking bearish. I like this setup. I wanted to see a retest and then come back down, at least here. We're looking at a potential 420 pip move, but I need to see just stay below. I don't want it to come back up. So I'll be coming back to this chart. Now, could this be just a fake out? It's a low right here. It's a low. I wanted to come back up. There's going to be an imbalance here. I want to come back and fill up the balance, but if it comes back up and take that this high, that's going to be a problem for me. However, I think CAD's going to hold its strength. But these are two areas that it could bounce to. But right now it's at a very nice supply area. If you just short it, and I'll be looking to short in this area, possibly it could go to another area. I would have to hedge it if it goes against me, which is fine. How about pound CAD? Ooh, no. Okay. All right. So with pound CAD, it just to me, Look, it's right in the middle. This already broke this. This is going here. I'm not looking to do anything until it gets here. Yeah. So if this is where this is at, then I can only assume with euro strength coming in, going back to euro CAD, I think this is going to be just a downside move to the upside, because with euro, news coming in this this Thursday with the bank rate, I'm not going to do anything to. In fact, I'm going to remove my alarm. I'm not going to do anything to euro CAD until afterwards, which is the central bank's news. I'm going to go ahead and trash that alert. You can delete that. I think this is going to go up a little bit. I'll be looking for it to go a little bit. This is where I like to short it and then come back down. I look at pound CAD. I'm like, oh no, wait, hold on. Just look like it's going to go more up. Yeah. This is it right here. This is where I like to see it. Okay, a little bit more bullishness on pound CAD, but I'm not looking to do anything on pound CAD or euro CAD, especially euro CAD, until after the euro news on Thursday. Then I'll be looking to short it. These euro odd, pound odd, they all look like, now I'm thinking about it, looking like they got more bullishness to the upside. Ooh, look at this one. Your NCD, look at this. This is, now it's starting to show some signs, but I'm not convinced. I'm not convinced this is ready yet. I think this is going to be, I like the short. I wish I would have got into this. This is nice, but I'm not convinced yet. Until, well, we got NCD news coming in. But either way, to me, it got a little bit more upside to potential. It just created a low, which is okay. Now it's going to come back up, and I want to see if it's going to take out this high. That's going to be the key point for me. If it stays below this high right here, I'm convinced to short it again. Then I'll be looking to short. But obviously, we got NCD news, we got euro news, so I will wait until euro news on Thursday, and then I'll look to short this bad boy. Oh yeah, all of these are looking really good for short. But we got to be very careful because of the fact that we have NCD news, employment news, and we got euro news coming in Friday. Oh, that broke that one. I think that's just going to be coming up or something along that area. A little bit more bullishness to your NCD, pound NCD. But I tell you what, they're all great setups. You can't go wrong if you short, and if it goes against you, got to be ready to short it again, cost average. I don't think any of these you can go wrong. You can't go wrong shorting that, and then it goes up against you, 237 pips. Okay, that's 237 pips. So if you put the stop loss, you're going to get stopped out and get frustrated because you're trying to time the top. So either way, if you're going to play the stop loss game, then wait for the confirmation. To be totally safe, wait for the confirmation break of structure. Right now, we don't have that. So I'm not convinced to say that we're bearish yet. But if you know how to trade the way we trade, and if you're willing to take a test trade and short this, and if it goes against you and you're willing to cost average that short, then you're going to get a nice trade. Okay. Other than that, I'm not willing to do anything until it gets up here. I'm gonna put my chart alarm right there. That's gonna be my chart alarm. And your NCD. We'll come back to that. Pound CAD. Oh yeah, I like this one. Yeah, all of these are looking to be set up for shorts very soon. Like I said, if you do a cost average game, I think you can come out winners. Right now, perfect time to short the tops. These are excellent trade setups. If you're looking for the play with the stop loss, then I would definitely wait for a choke. Definitely. What do we have here? Ooh, hope someone took some shorts. I hope you did. Went long. I'm sorry. If you went long, then hopefully you'll be looking to hopefully you broke even. So here's what I'm talking about. If you went long, let's say you went long here and it went against you, then you went long here. Well, if you went long and you didn't take a long here, then guess what? You're just about break even, right? If you didn't go long until maybe right there or right there, then it's coming close, okay? And it's on its way. So right now, yeah, I'm bullish, right? I'm definitely bullish. I think it's going to look like it's going to may come back, maybe give it a little bit of retest. I can see this is going to be the high, and then it's going to break that, give it a choke, and then we're coming back. CAD Swiss French, nice setup to go long. I think that CAD strength is going to be nice. Euro pound. We ready to short this bad boy yet? If I would have to wait until Friday to see what I'm going to do with this one. But this would have been a nice short. Oh man, I should have shorted this one. Okay. Well, I think it's going to come back up maybe, but we'll see. To me, I'm still bearish, but I think it's going to I think that pound might be strong. I think it's going to push it back up again. I think we're going to be in this range a little bit. But long term, I'm bearish. I think we're going to be in this range a little bit. I think it's going to come back down a little bit to this range. And then on Friday, I think we're going to shoot back up. So I'll be looking to go long here for a short term or wait till it gets up here and short it again. Either way, you can play it. Pound Swiss France. We're almost done, guys. Oh, look at this. Nice, nice. All right, let's for a pullback. Let's go. This is that range. Looking good. Pound Swiss French. If anybody went long Pound Swiss French and you're up 221 pip, or if you went long in this area here, anywhere in this area, well, guess what? You're now in profit, right? So in other words, if you went long right here and price went against you and you held it, and it didn't hit your stop loss, you're up. Congratulations. Okay. There's more upside. This trade is not over yet. Odd CAD, where are you at? Okay, more downside opportunity. This imbalance looks like it's getting mitigated. No, it's still there. Yeah, nice imbalance there for the 4 hour. Yep, a little bit of imbalance right there. So I think this got a little bit more downside to go. Odd CAD, I'm bearish. And CD CAD, I'm on a little bit more to go. This would be my demand target. This is where I would look to go long, right? When you look at this right here from this swing low, swing high, it's not there in my discount zone for me to consider going long yet, but I think NCD CAD got some room to go short. Odd switch France. Oh yeah. Oh yeah, this is it. NCD switch France. Let's go. Oh yeah. Yep. I would be bullish. All bullish. In fact, out of RCD CAD and NCD CAD and these minor crosses with let's say NCD CAD and odd CAD between, let's say this, between odd CAD and switch French, I would be looking to switch French. In fact, with the CPI data coming in Friday, ooh, I think this is going to be a nice show and tell for an opportunity to go long on switch France, NCD switch France. We're ready to go long yet? Yep. Okay, there we go. I think we're ready to go long. So NCD switch France looking good. So to me, I'm bullish on NCD switch France, odd switch France, odd CAD, and NCD CAD. I think there's a little bit more bearishness to those sides before I go long, unless this holds. Okay, let me put it that way. We look like we're at a very key supply area and key demand area right now. If this holds, and I think that's important to note, if that holds, then we're going long. Yeah, this area holds. Mark that up. If this area is hold right here, then we're going long. That's very, very important on odd CAD. If it breaks, then I'll be looking for more downside, which I think there's going to be, odd weakness. NCD CAD. Same difference. If this holds, then we're going up. But if not, well, we're going to go down. We're going to go down. Now, you would think, okay, so if odd CAD and NCD CAD is looking bearish, wouldn't that mean the same for odd switch France and NCD switch France? It depends, meaning yes and no. So if odd CAD and NCD CAD is looking bearish, that means odd switch France and NCD chef could be bearish, but I don't think it's going to be more about odd NCD weakness than it is for me on the CAD and switch France. Okay, I think odd and NCD is going to be fairly strong, but I don't think they're going to be very strong. In other words, I don't think they're going to be the strongest currency, right? I think dollar may be the strongest currency, or euro and pound may be the strongest currency. That's why I think there's more bullishness to euro NCD, euro odd, euro CAD, pound CAD. I think it's going to be more about CAD strength. I think CAD's going to be a little bit stronger than Swiss francs. I think Swiss francs is going to be the weakest currency this week, and therefore I think odd Swiss francs and ECD Swiss francs may have an opportunity to be bullish. These are really good setups. NCD Swiss francs and odd Swiss francs are at a very good critical historical low. You can't go long in these currencies in terms of potential upside than it is downside. Okay, if you look at odd Swiss francs, this is on a monthly chart. Look at that. It's on a monthly chart. You got more better opportunity to go long NCD Swiss francs. Monthly chart, you have a very good opportunity to the upside than the long side, to the short side, right? Going long, the long side is opportunity all of these suppliers is going to get hit, rebalance, right? Versus odd CAD, right there in the middle, just opportunity to go a little bit lower and there's opportunity to go a little bit higher, right? Especially when you're about, when the price is about right there for odd CAD and CD CAD. And CD CAD is low, but if you look at it overall, it's kind of in the middle between the swing high on the monthly chart and the swing low, just kind of like in the middle. Price is right here right now. So there's more opportunity to come back down if it wanted to right here, right? So that's why I was saying our Swiss francs and NCD Swiss francs, on the other hand, look at that. It's already low from that swing high, right? And then you look at NCD Swiss francs, same difference, all-time low, right? So those are my analysis, and those are trades that I would be looking for this week. I hope that helped you guys get your chart set up. We'll be having a live trade room session. I'm back in town, so I'm back home. So live trade room session for our coaching students on Tuesday, Wednesday, and Thursday. Notifications will go out, and I'll see you guys on live trade room sessions for Tuesday, Wednesday, and Thursday as we set up to look at for these pairs. FOMC rate decision coming in on Wednesday. We got very strong CAD and US dollar non-farm payroll coming in Friday. Europe, Australia's bank rate decisions on Asian. We'll definitely see what Australia is going to do, right? I think Australia may have a little weakness, but I think Swiss francs eventually is going to be more weak with those CPI data, but we'll see. And then NCD, we got the bank, we got the employment data on Tuesday night, and then Euro may pick up some strength, and that's going to come in on Thursday with the rate decision. Okay. Other than that, we'll be closely monitoring it, and I'll see you guys later on to next weekend. For those who are watching this recording and watching the top-down analysis, I hope it helped with your trading on what I'm seeing and some of the analysis that you have received or you're looking at, and I hope it helped you. Other than that, you guys have a great Sunday, and I'll see you guys later. All right, bye-bye. Recording and replay will be posted up in about another hour. Bye-bye.